Now, before I get into the content of this video, you shouldn't be investing or trading money that you cannot afford to lose, number one. And number two, if you don't feel comfortable, like watching your account balance fluctuate a lot, being slashed in half, in the same way, you shouldn't be investing. This is a tough game. Matter of fact, this is a very tough game. I remember watching an interview with Ray Dalio, which is one of the greatest hedge fund managers, and he was saying that this game might even be tougher than winning the Olympics. Okay, so if you don't have the guts, if you don't know how to weather the storm, go find you something else to do. But if you do, this industry can be very, very profitable and rewarding. Now, what are you? Are you a trader or an investor? Do you know the difference between trading and investing? If you are monitoring the price of a security, or even of the broad market ETF, or even of the main indexes on a daily basis, on a weekly basis, or even on a monthly basis, that's going to make you into a trader. If you buy a position in a company with consistency every month, every year, twice a year, regardless of the price, that makes you an investor. If you own a rental property, or if you are a business owner, or if you own a farm, do you care about the daily valuation of that asset? No, you don't. You are a homeowner. Do you get an appraisal on your house every day, every week, every month? No, you don't. I hope I got my point across. So what are you? Now, of course, there are ways to make money by trading, and there are ways to make money by investing. But what is definitely trading? And what is investing? They both have the same philosophy. The time frame can be different. And what is it? It's putting up money today to get more money at some point in the future. It's like it's been said, what is better? A bird in the hand or two in the bush? That's all what it is. Oh, the other thing, it's been said, as you sow, so you shall reap. That's a very good analogy about what I'm going to talk about. You can accomplish that by trading, or you can accomplish that by investing. Now, this also depends on the time that you have, on the money that you have, what are your objectives, what is your family situation, what is your age, are you close to retirement, or are you already retired? All of that is going to come into play. But here is an advice I'm going to give you. Do whatever floats your boat. Don't care about what other people are doing. Don't care about what other people are saying on social media. What are you trying to accomplish by trading or by investing? Are you trying to beat the market? Are you trying to hit the jackpot? What are you trying to do? It is important that you have an answer to all those questions before you get into this game. Are you trying to make a couple $100 a day? Are you trying to double your money in the next month? Are you trying to build a legacy? Are you trying to build a dividend portfolio? And living off of that, or leaving it to your offspring? What are you trying to accomplish? All of those are viable answers, but you need to be clear with yourself. The reason why you are getting into this game needs to be stated, needs to be written down on a paper, and you look at it every day and you work towards that goal with consistency day in and day out. It also depends on your expenses. Do you have $1 million? What is your capital? There is nothing wrong investing $1 million in a dividend ETF that pays you 4%. That's 40 grand a year. Now, of course, you're gonna have to pay capital gains on that, or rather taxes on that. But there is nothing wrong. If you're telling me that 40 grand a year is gonna be what you're aiming at, it's perfectly okay. You don't have to beat the market. So now that this is clear, what is your strategy to accomplish that? Is there a way to make money by day trade? Sure, yes. Are there profitable day traders? Sure. All of those big banks, the Vanguard, the BlackRock, they all have full-time traders trading around the clock. Foreign stock markets, they're trading in China, in Japan. So is there a way to make money trading? Yes. Is it going to be a good fit for you? I don't know. It depends. Now, is there a way to make money by swing trade? Sure. Just look at the market fluctuation, pull up the price chart, the past month, the past 6 months, the past year. And nearly every security fluctuates 10, 15, 20. Even the more stable securities like Apple, Tesla, all of those securities, they're very established companies, huge companies, they fluctuate. So is there a way to make money by swing trading? Sure, yes, there is. Is there a viable option for you? I don't know. This is up to you to figure it out. Now, is there a way to profit by investing for the long term? Are you a buy and hold investor? I don't know. But is there a way to profit by buying in it and holding it for the next 10, 20, 30 years? Yes. Is there a way to profit by buying an ETF or buying a broad market index fund? Sure, there is a way. What about dividend stocks? Is there a way to profit by buying dividend stocks? Sure. I was just telling you about the 4% yield. So as you see, that there are many different strategies. There is no this is not a black and white. Now I do know that there are a lot of people on the internet. There are a lot of YouTube channels. One of them is for day trade. The other one is for ETFs. The other one focuses on dividend stocks. Then it appears like their way is the only way. It's because they have an agenda. They make it look like you should be doing dividend stocks. Only that. Or value investing. That's the only way to go about. You either do that or you are an idiot. But is that really the reality of things? Nope. There are multiple ways that you can profit by doing this. Now, you will have to set some rules. Before you even get into this game, you're gonna have to set some rules. And you'll have to stick to those rules. It's important that you take time to write down those rules that are going to work out for you, for your specific situation, and never breach those rules. Now, do you want to know what my rule is? I'm going to give it to you. Never sell at a loss. Now, does that mean that you have to play about the same rule? No. You can do whatever you want. If you want to take a 10% loss on a position because you know that you're going to use that money, invest in another security, feel free to do so. But what is going to happen then if you're going to lose another 10%? You have a better idea now. You're going to use that money because you have a better use for it. You want to think twice on that. Like Einstein put it, you can't fix a problem with the same mind that's created it. So you might want to think twice. Now, it's easier to approach this game by having a checklist of things not to do. Okay? I'm going to tell you what not to do. Never buy stock in a company that's losing money. If a stock has a negative EPS, stay away from it. As a general rule. Now, I do know that you probably profited by doing that, or you know someone that's about a speculation, a new company, a startup that's losing a lot of money and then sold it within half an hour, or bought a pink sheet, bought it at 11 a.m. and sold it at noon, it profited. But that's not what I'm talking about. We want to be good at this. We want to get good to where we profit with consistency. So do not buy a property or do not buy anything, a stock or a company that's losing money with a negative EPS. Now, when it comes to the price of the security, do not buy a stock that's trading over 20 price to sales ratio. Do not buy a stock trading over 30 PE ratio. And do not buy a stock that's trading at over 40 price to cash flow ratio. Now, I know that a lot of that depends on the sector, on the industry. But as a general rule, you don't want to overpay for a security. That's how you make money. You buy low and you sell high. You can do it that way. Of course, you can take advantage of the momentum, or you can buy high and sell higher. That too is a very viable strategy. Now, the reason why you buy stock in a specific company must be stated. Why are you buying stock in their company specifically? Is that because somebody has told you to do so? Is that because you work for that company? What is the reason? Is that because your Facebook group is telling you to do so? Is that because your neighbor has made a lot of money with that security and now he's telling you to do so? The reason why you're buying that stock must be stated. You have to write it down. Next, why are you buying a stock at that valuation? Why? Again, do not overpay for stocks. You have to write it down that you are buying Apple at a $3 trillion evaluation market cap for the following reasons. Reason number one, reason number two, reason number three. You'll have to spell it out. Next, what are your expectations? What do you expect from the purchase of that stock? Write that down too. Are you expecting a 5% gain? Are you expecting a 20% gain of your initial investment? What are your expectations? Are you waiting that the stock doubles before you sell it? Are you buying it because you want to sell it when you make 10x your money? All of this must be stated before you buy the stock. What is your exit strategy? You have to write it down before you buy the stock. In what time frame? You'll have to state that I am going to buy XYZ stock at a $1 trillion valuation because I am expecting that it's gonna double in the next 5 years. Writing it down, or whatever your exit strategies is. Because I'm expecting of gaining 10% of my money in the next 3 weeks. You never have to ask yourself, when should I sell? Because that answer was already replied before you bought the stock. Now, once you do that, I guess you are already on your way. Now, of course, if you're new to this, I would recommend that you buy a combination of stocks and ETFs. You can buy on a daily basis, on a weekly basis. Again, it depends on your financial situation. Whenever you get paid every other Friday. I don't know, you can set some money on the side and invest slowly. But I would recommend that you invest with consistency. You buy good company stocks and broad market ETFs, or you can buy a sector of the industry ETFs. I would recommend the S&P 500, which is the most popular, and you can buy that through different banks, or you can do a variation of the S&P 500. There is the large cap S&P 500. There is the dividend S&P 500. There is the value ETF S&P 500. There is the dividend aristocrat. There is the dividend appreciation, as opposed as the high yield ETFs. All of those are very, very viable options. Of course, there is the Dow Jones ETF. Those are very good investment that anybody in the right mind can do. Notice something. Those are large blend ETFs that have most of the largest companies And you're not really linked to any specific sector. Those ETFs can have companies of multiple sectors. And I think that's a very good thing to do. I don't know, if you look at the top 20 holdings, it can be 5 tech companies, 5 financial companies, 5 industrials, and 5 pharma companies or energy companies. Now, don't quote me on this. And that's how you diversify. But in order to diversify, you don't have to buy 50 stocks. You can only buy one, which is the broad market ETFs or whatever your expertise is. If your expertise is in financials, well, then you buy the financial ETF. If your expertise is energy, buy the oil and gas ETF. It doesn't have to be any more complex than that. Now, of course, if you want to adventure yourself with individual stocks, you can do that. But again, it is paramount that you know the reason why you're buying that stock, what your expectations are, and what your exit strategies is before you buy anything. Okay? So now, once you buy with consistency on a daily basis, like I was saying, on a weekly basis, you buy what makes sense on that day, on that week, and you sell it according to the exit strategy or according to your objectives. And that's going to be different for everyone.